Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market fell sharply on Friday after it was announced that both President Trump and the First Lady tested positive for COVID-19. For now, the president will wait in quarantine and along with the rest of the world after it was reported his symptoms were mild. But he is considered in a high-risk category, and really we have to see how the disease develops. 40% of people that get the disease have no symptoms at all. And then, of course, when you have somebody in the high-risk category, you really have to wait to see how it develops. On average, from the point of infection to the time you get significant symptoms could be as long as 11 days. And the 5 to 10 day period is really key. So everybody, the whole world, is going to be watching. The guess is that he was infected on Wednesday from his aide, Hope Hicks, but they're testing other people in the cabinet. Mike Lee is now tested positive, and Vice President Pence and the Second Lady in quarantine have tested negative. So a lot of news out there. It's really a waiting game now to see how this develops, and it's sure to have investors quite nervous. A lot has changed now. You know, the campaign, the debates, nobody knows how that's going to be. And much in focus will be the vice president and vice presidential candidate, Pence and Harris, as we start thinking about the age. Well, we've been thinking about it anyway, but the age of the president and the vice president, Biden, as it looks like, it's definitely going to be a ton of focus now on these vice presidents and the potential for them, being in the role of president before this 4-year period is out. So a lot really to think about there. Investors really overall put on quite a good show all week until Friday, and then took a bit of that away as the market headed lower, but it's been really choppy here on Friday. It started out Monday, a slow Jewish holiday, but the market moved up really sharply on stronger data out of China and on news that Pelosi had offered a compromise down to $2.2 trillion on her stimulus deal. And the market ended about 60 points higher on the day in the S&P, so that was really a good showing on Monday. But the rest of the week was choppy up and down. It was affected by each update on what would be the fifth stimulus deal coming out of Congress. And then on Thursday, it seemed like Pelosi really gave up because she brought it to the House. The House passed that $2.2 trillion deal. And now it's very, very likely to fail in the Senate anyway. So everybody knows that, and it looks like talks might continue, but they're not getting very far. And now with the president ill, who knows how fast anything could be done in there, if at all. So markets, of course, nervous about that also. Around the debate, which was beyond ridiculous, there was tons of swings going on, like a 68-point range during and after the debate in the S&P 500, as it was up over 30 and then fell to down over 30. It seems like they love the fact that Trump was a bulldog during the debate, and then reality set in a little bit later on after that these are the choices that we have, and maybe that's not so good. There's no way that any of the debate changed anybody's mind Well, except maybe changing them to a no vote at all. And now at this point, we may have seen the last debate, which really president's health dependent. And here we are on Friday, a huge down opening, where we saw the S&Ps down as much as 60. And then it had gotten a little bit worse as the job numbers came out, as the payrolls showed that only 651,000 jobs were created versus 850 expected, and the unemployment rate drops to 7.9%. That was a surprise, but there's all kinds of questions around how these people that are out of work are classified, so none of that really has any validity. You don't really know the real numbers, and U6, of course, is much worse. But as usual, after the big decline, the buyers came in and cut the loss pretty sharply. Part of it might have been because the report came out that the president's symptoms were mild so far. And we've had a very, very choppy day here on Friday as the market rallied all the way back to the Dow getting slightly to the plus side. Then they had a big sell-off again, and now the Dow is about unchanged here at midday as we're doing this show. Our analysis, which had shown it was likely that would be some upward movement into mid-late October, well, that changed. And last week, we showed that there were some pretty big breakdown in tech stocks. You can see our report on that in Market Week last week on September 25th, where we showed a lot of charts in there. And then on our Future Speak show and other shows, we have shown the breakdowns in the NASDAQ heavyweight stocks, which we think will weigh heavily on the market. Today is a day that's a good example of that, with the Dow run unchanged, S&P's rallying all the way back to down 15 points, which is just only down 0.5% right now. The NASDAQ is down over 2%, 247 points at this point, with these heavyweight NASDAQ stocks really under some significant pressure. And we think that those breakdowns are going to continue to be a problem for the market. And now, with the president infected, upside will be hard to come by, in our opinion, at least upside that lasts for any length of time. For the next couple of weeks, hopefully then the president does recover. It's not anything serious. And then we can go back to looking at economic realities and the presidential battle that's going on, and the economic realities, sadly, being that we have a broken economy. And no one out there seems, to either know how to fix this, to bring the proper cure to the economy, or maybe they don't care to lose their job to do that, which of course would bring some pretty bad turmoil by really facing these issues and taking the cure and letting the purge come. Well, the market is going to likely continue to be in this big swing, in the big swings that we're seeing now. But none of that really changes our belief. Not the president having COVID-19, not any of the stuff around the election, all of that. We believe that a major top is here in the market. Always the possibility of the testing of the highs. But we think based on what we're seeing in some of these indexes, that a huge divergence and really weak conditions in the NASDAQ stocks, we think that a top is here. Here we are today, again, at midday, S&P 500, NASDAQ, the Dow, they're up 1.5% on the week, so it was a decent week. The Russell up more than 3% on the week, and Russell's doing well on Friday, up on the day right now, about 10 points, that's about 0.6%, while again the S&P 500 is down slightly and the NASDAQ is down very significantly. Bond market, down, a 30-year loses about 1.25 points, 10-year yields gain about 3 basis points to 69/100ths of a point. Gold gains over $40 on the week. That hit our bullseye actually on our short-term analysis. Silver also rebounded about $1. So there was pretty good gains in those markets, which are often opposite the dollar, which lost 0.7% on the week. It basically has come down and failed from the resistance level also that we showed last week in the short-term view and in our Wednesday Future Speak show for members. Oil down about $2.50 on the week. It was worse here today, but it has come back a little bit, still down 3% on Friday, as the fears are that the economic recovery is slowing again, and that affected the oil market in a negative way. I actually like oil. I think that it's coming down to testing the recent lows, and very soon we're going to be getting a bottom, and I'm going to show you that very, very soon. I want you to make sure that you go to the askSlim website. Look around there. We have so much to show you at askSlim. Explore it. And then if you're watching this on YouTube, or go to YouTube, subscribe to our channel. We do lots out there. And we're putting more and more out there. Tiny little short videos that we're going to start to do on some analysis that we don't do on other things. So you might want to subscribe to our YouTube channel and click that notification bell if you want to know when we put some things up. And make sure that you like this video on YouTube. Give us a thumbs up. Follow us on Twitter at askSlim. We're putting stuff on there, of course. And you can write to Matt at askSlim.com for membership info on some very important things that I'm going to show you. Do a little brief thing on something we almost never do this. A little different trial that we're going to put out there today that we practically never do. And I think you're going to, if you've never been a member, this is really a great way for you to get a great picture of what we do. So make sure that you don't roll past that as we go forward. So that's that. We're going to get now into our short-term view for the 5 major markets for the next week as we look at light crude, the gold market, the dollar, the bond market with the ZBs, that's the 30-year, and the S&P 500. Here is the light crude market. So you can see in here a great example of cyclical patterns. This on the bottom, these little arcs, if you're brand new here, those are called cycle brackets. That is not an indicator. This is simply a drawing tool, and cycle analysis is an art form. We do this mostly manually. And what you see in here are the repeating rhythms. So each of these lows, you can see how they line up. This is the ideal cycle. This is how it resolved in reality. And you can see how it's really perfect. This, when it rallies up and makes a higher bottom, it's bullish. Then you expect it to make a higher high, which it did. But when it rallies and briefly makes a higher high, way on the left side, it's called a left-hand translation. And then if it breaks the key support, as you can see happened right over there, then what that tells you is negative. And yes, this fell right through the cycle low period over here. Bottom just a little bit early. And then you got into the next cycle. Well, on the intermediate patterns, it was suggestive of the fact that you could get a test of these lows, which you have right over here. And now we're getting into a period where it's likely to start repairing itself and get some basing going on in there. So what we're calling for is a bottoming this coming week. In other words, it might come down, take out those lows below the 36 level, maybe getting even down as low as this support down over here, which is at about 35.15 or so. So somewhere down over here in the next, we'll call it 3 to 5 days, and then begin the next rally up into this next resistance zone. This next cycle, were it to be a bullish cycle, in other words, make the bottom here and then have a higher bottom here, would then set up a better period out there. For the next 2 to 3 weeks, we're calling for some modest downside still, and then putting a bottom in. Momentum negative that you can see here in the slim ribbon. It went neutral and then went negative again. So that's a pretty negative occurrence. When it turns negative, there's a lot of negatives there, and it's going to have to repair itself also, get into a positive momentum before it can really move up. Some of the evidence, well, intermediate pattern and short-term patterns are bottoming. We expect lows to come very soon, and then attempt to begin to get to the upside. And if you want to know where our upside targets are, watch the Future Speak show on Wednesday. Do not miss that. So light crude, we think lows are coming pretty soon. Now we'll get into the gold market, /GC. Here is your gold pattern right over here. I'm just going to blow this out, make sure I'm on a 2-year. Yep, we got that. And come back right there. Now, you can see in here, again, the cyclical patterns. This is a busy chart. The reason is because we've got silver overlaid on it right there. That's the silver that silver-colored bracket that you see there that are dashed. And these are the gold patterns right in here that we're looking at right there. So they're slightly what we call out of phase. And we thought that this decline would come right in here because we thought silver had another decline to come. And that did happen. Now, it's really suspicious to us when we look at the intermediate patterns that rallies will stall. And you can see there's a lot of layers of resistance that you can see that we have in there right there. So, what we're looking at in here is the gold market that is in this resistance area and likely to stall. And that would be a rally that potentially could get up into this 1934 to about 1940 is right there. 1934 right there, 1940 there. It's stalling here. Our target was 1918, and then it kind of failed, as you can see, and still has some upside room in here, in our opinion. We think it's going to kind of chop its way up into that area, 1934 to 1940. An outside chance up here at this 1967 level, but that's really outside. It would take a very sharp decline in the dollar for the market to get up to that level, at least at this time. So try to get into this area here, then mild pullback coming after that. Momentum in here is negative. Projection oscillator giving warnings it's going to come down again. You want to learn more about that? Oh, we've got some great stuff coming up as far as the slim ribbon and projection oscillator. We're working on our own indicator that kind of combines it all, and you're going to just love it. So that is a look at the gold market, pretty much a bullseye in there for us. Now we'll look here at the dollar market, $ DXY. And you can see what we looked for in here was a market that would be kind of choppy and then break to the downside. So here's the period we thought it would be choppy and then move to the downside. So really did pretty well. We thought it would get up to maybe 94.80. It didn't quite do that. It got up 94.67, and then we thought it would be moving to the downside somewhere below 93.20. It got right over here at 93.52, and we still think it has a pretty good chance of coming down further in here. We're going to call for a choppy market in here, a range of 94.80 to 93.20. This is 93.20 right over here. And then after that, a lot more risk coming into the downside. Momentum in here is up. That's probably going to keep it supported in this area that we have right here now. And that's probably going to prevent the metals markets from getting much in the way of upside right now, which is really what we think. It's only some modest upside potential in the metals markets right now, gold and silver. So we're going to be looking for that. And then there's a lot more risk out there in coming weeks. So it's kind of a 2 to 3 week picture, chop around in here, and then turn down pretty sharply. Some of the evidence is that the intermediate rally that we're in now, we think, is brief and will be over soon, and there's a lot of risk of a significant down move into late October. Next thing we're going to look at in here is the bond market /ZB. And you can see in here, again, the cyclical patterns. This one has cyclical harmonic families that you can see in there. There's a dominant and 3 minor cycles. And you can see this one right over here. I'll highlight that for you. You could see how the 3 cycles showed up very, very nicely. When you get 2 of them bottoming together, you get your biggest declines, and you can see how that lined up. 2 of them lined up together, the biggest declines. We're not really sure which of these is the low because they're kind of on both sides of that cycle bracket. And it looks like, we have it pretty much right as this is coming down here as expected. We thought that it would hold in a fairly tight range and then be breaking to the downside. That's pretty much what we saw happen here. So we got it mostly right. Right now we're looking for the range to be around the 77 16 area up around over here. That takes you out to this next cycle there over the next several weeks. And the low area down over here that we're showing around 74.06, which is down right over there. That's kind of the range we see right now. But then some of the evidence really says that this market has got downside risk. And we're still looking for a decline to as low as 171, which is our target into late October or early November. So that's the short-term look at it, but the intermediate term really is lined up with a decline right over here, and that's why we have that bigger decline headed out over there. So bond market, we think overall has some significant downside risk building, and that's the sum of the evidence there. So overall, when we look at our 5 major markets, the result for last week was a very solid 85 to 90% accuracy as we look at support resistances, cycle patterns, timing, the important levels. So we did exceptionally well. Last week, the previous week, we had a little dip down to about 55%. And we like to keep our average up at around 65%. I mean, we'd be 2 to 1 right, which would put us up there in the stratosphere relative to a lot of other analysts that are out there. So that's a look at the first 4. I'm going to be looking at the stock market in just a moment, but you don't want to miss this. This is rarely offered. Our level 2 trial membership. This is just level 2 and level 1. That's all that's in here, and what's in there is just amazing. The stock index report daily, I'll show you that, which really deep analysis on the indexes for short-term traders. Stock index report live stream, just a great platform that we show you that has got charts that are just loaded. I'll show you that. Also, a weekly stock index report, weekly ETF review, our Slimulator momentum tracker for investors, a fantastic app that we've built with all our algorithms in there, and our library of 500 plus videos, 9 different categories. This special is only $22.50 for the first month. You can binge watch. You'll get all of our daily information. Just a tremendous amount that you're going to get, and so much that you'll learn. Those 500 videos I recorded, and now I'm re-recording some brilliant stuff in there. So this is just more than you could possibly handle in a month to catch up on this stuff. But just a tremendous learning opportunity, and I believe will really help your trading. Let me give you a little detail about that. The stock index report I really want to focus on here. It's for index traders, and if you love having the key support resistance levels, you want daily technical insights into directional bias. How do you what you want to be long or short? You want to know that trend and momentum and the cycle work we do. Well, this is a must-have. There's nothing like it out there. I'm telling you, you have never seen this before. And it's a custom crafted work every single day that we do this with these important areas on the charts. $22.50 first month. Here's what you get. So the stock index report, this is what it looks like. This is October 1st. So this was yesterday. I put up a whole one for you. What you're going to see in there is you're going to get the yellow zones are the acceleration zones. When they get in there, the probabilities are very high they're going to cross through them. So you're going to get the idea of how to hold on to a trade for a long period of time. But what directions do you take? Well, this helps you right over here. This is our reversal scout. That line you see going up there, you can see that it helps you be in the right direction of the market, and it tells you when one of the indexes is weaker while the other ones are stronger. What incredible information. And of course, key support levels right over there, key resistance level, hits support right there, hits resistance right up over here, turns down, just key levels. It's an amazing thing. We have people telling us it's been life-changing for them. So if you're a stock index trader, you really want to have this. And you will get our stock index report daily snapshot. This comes out in the afternoons. You get our technical evidence on the momentum on each of the 3 different This just shows the spiders, but you get the same kind of thing in each of those three indexes. Then you get the comparisons in here on all the time frames on trend and momentum. You're going to get our 2-hour charts, which give you tremendous view of our momentum and our market condition indicator on the bottom here. Very unique and proprietary indicator that really helps you in all of these key areas there of support and resistance, and the buy and sell signals that occur. Just an amazing amount that comes to you. Level 2 trial, 2 weeks only. It's going to end on 10/16. If you're a trader, you're new to the business, you're a stock index trader, there's so much in here. It's really for people of all levels and all styles, because that library is just magnificent. The stock index report live stream, stock index report daily snapshot, the weekly stock index report, really in-depth information there for longer-term traders, the weekly ETF report, our Slimulator momentum tracker, 1,000+ symbols with our algorithms in there. You'll know what conditions are of these stocks in 3 different time frames, plus our output, which really tells you the directional bias. Is the stock in good shape or not? Well, we really help you with that. And our massive library of videos, 500+ videos, 9 categories. 80-something videos and tools for techs. Many of you are going to learn a lot. Have problems with something going on for you personally? Watch Trader Psychology. It really will help you a ton. $22.50 for the first month. You can get quarterly discounts. Write Matt at askSlim.com for information if you need it, or he'll send you the link. You can get quarterly discounts that are going to save you more money. MATT at askSlim.com. This is just absolutely incredible. What a deal. $22.50 for the first month for all of this. Where else are you going to get that? Such unique custom information. Please do try it. Support yourself and, of course, support us. All right, so now we're going to get into it. Here is the short-term view for the U.S. stock market. So let's take a look here as we look at SPX. Again, last week for all of our analysis that we did, we were about 85 to 90% correct. It was great. Here is where we get a miss in here because what we believed, where we believed the key low was and the key anchor point being right here, turns out it was right here. Instead of the bottom of this minor cycle, it was the bottom of this minor cycle. So what happens is that we get a new anchor that you see right over here as we got that cycle shifting out by the length of that minor cycle. For a lot of you that are not familiar with cycle analysis, that's going to sound like a lot of mumbo jumbo, but in truth, it makes a ton of sense for all of us that follow this style of analysis. So where are we right now as we project out? So the market moved up past some minor resistances and went from negative momentum to now neutralizing, as you can see right over there. So the market has done a lot of repair. And based on the news that came out with the president having coronavirus and the first lady, the market has done really pretty well today with the S&P 500 only modestly down about 18 points right now. And we do have a much worse market, though, when we look at the NASDAQ, which is down a solid 270, 2.3% for the NASDAQ. And that's the conditions we're seeing with the NASDAQ being much weaker than the broad market. And those, of course, are the market leaders. So what we're looking at here is this structure, this cycle structure. Were it to be bullish, it would move out above this blue line, this blue arrowed line right over here, and get into these resistance areas. Were it to be somewhat neutral, it would stay kind of in this around that arrow a little bit on the lower end here, and you really get into a lot of risk out over here. So for now, we see kind of a choppy situation. So we get some news that the president is doing fine. It's not really a severe case. Well, the market's going to try to get up into these areas. If we get a sense that it's a lot worse and that the everything is going to be up in the air and in turmoil, it's going to trade more in these lower areas over here. So you can see what we're looking for. Basically, what we see here, this slight change really gives us a sense that it's going to, no matter what, you can see the minor cycle coming down right over here. which came off of this one right there. That says to us that you're probably going to be sloppy in here right now and try to get to the downside. We're looking for some, we'll call it modest move to the downside, and then another attempted move to the upside out over here, and then this is where a lot more risk comes in a few weeks. We'll probably have the next week and a half of a lot of choppy action. We're going to look for the supports in here. Now this is around 3,300 right over here. This is around 3,277, and this one down over here is around 3,247 right there. So this is the area we think it's going to trade down to sometime in the next week, at least under, or best under, the 3,300 area. And then after that, get again some more chop, more attempted rally. So that supports, we think, will hold right now, unless the president gets very, very ill, which we all hope will not happen. And then then again do better out here. Choppy situation we think we're going to have here over this next couple of weeks, and then a lot more risk picking out over here as we get into the mid to late October period. So upside resistance is right there around 34.12 to 34.65. That to us we see as a best case during these next couple of weeks, and a fairly wide range as we look at this, as we look at the range of 34.65 down to about a level of potentially 32.47. So 34.65, 32.47. That's right. I just want to make sure I get these numbers here. 34.65, 32.47 is this wide, choppy range that we think we're going to be in. And then if it gets up into that area, we think it's a really, really high probability sell up over there. And again, we think that the NASDAQ in bad shape is going to make it pretty hard to get those kind of moves in here, to get into that level, which we certainly hope we see above 34.12 to give us that really nice opportunity. So overall, choppy action, wide range that we identified, about 200 points in the S&Ps. Down for the next week is what's likely, another attempted rally after that, and then after that, some pretty good risk. Some of the evidence, NASDAQ much more negative. Tech-laden index has breakdowns. It really is going to make it hard for this market to move up. On days you get rebounds on those stocks, it should do a lot better. It's very fluid now based on the president's condition, and anything could be changing on an hour-to-hour, day-to-day basis in here. But you can see the kind of structure we have in here. It's more neutral than it was before, where this structure was pointing to the downside. Now, because of that shifted anchor point, it's more neutral, and we're just looking for that range in the S&P 500. That is a look at the stock market. That's a look at the 5 different markets we look at for the short-term view. If you're brand new, make sure that you take our 2250 special 1 month. Oh my God, there's so much in there. If you did not look and see that special, if you rolled past it, then go back and look at it. Tremendous deal, tremendous amount of learning that you could do. We want you to be ultimately successful, because your success is our success. That's it for the show. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.